Our next guest expects the AI trade to shift from broad enthusiasm to a more selective environment in the new year. Wall Street legend Rick Sherlund is founder of Sherlund Partners and recently joined Wedbush Investment Banking as a senior advisor. Rick, great to have you with us. Nice to see you.
Melissa, thanks for having me. And I should caution you that I no longer wear the analyst hat, so I'm going to be ducking some stock questions probably.
That is fine. We want to get into your head, Rick, in terms of how you're thinking about this AI trade. So when you say shift from broad enthusiasm to being more selective, what do you mean? And you know, what we saw today in terms of the enthusiasm behind the hardware names versus some of the others, you know, does that play into your thinking?
I think this year's been one of kind of a monolithic trade. People think of the Max 7. It's now about 35% of the S&P. But I think 2026, you're going to see that trade broaden out very substantially. You've got a whole universe of SaaS companies that the street's kind of looking beyond right now. There are some issues with respect to, is the architecture flexible enough to accommodate AI? Is the business model at risk? So they've been out of favor. But I do think you're going to see some of those come back where they've made good progress on both sides of adopting AI and the business model changes. You'll see a very robust IPO market because there are a lot of the private AI companies that have gotten to scale, and some of the SaaS companies that didn't get out in the peak of the market in 2021 will likely be coming to market where they've made good traction on AI and the business model shifts. M&A, of course, is going to be a big thing next year. All the big enterprise companies need to add AI into their own architecture, and an easy way to do that is through acquisitions. So I think that all the derivative beneficiaries of AI, the streets, and you guys have been looking at pretty closely, I think there's a lot more of that we'll see next year, not just within software, but broadly across the economy. So, and go ahead.
Yeah, sorry, Rick. Sorry to cut you off, because that's exactly where I wanted to go and to better understand your thoughts. And I'm not going to ask you to pick stocks here. But when you talk about enterprise adoption and really the follow through from the AI, are we talking, though, about the industrial sector and people finally, or banks, places that have had a great run? Industrials have rallied all year, I think, on some level because they were already running their business more efficiently. Are you really talking, though, about the platforms a little closer to home, especially whether you are talking about the hardware names? I certainly agree that software has underperformed here as people have been concerned about the hardware, and I think you'll get follow through. But please just clarify this enterprise adoption dynamic sector-wise, if you can.
Yeah, so a couple thoughts. AI has been a novelty for consumers and with chats, and a lot of knowledge workers have gotten big benefit out of it because it's very good at researching and summarizing content for knowledge workers. But after 3 years on the market now, it's finally becoming part of business process and workflows, how a company actually conducts business. So this involves the use of agents or agentics and how they collaborate and do complex workflows. As a result, the amount of inference that's going to be required is going to explode. A single call to a chatbot means it's one call to the LLM to give you the answer for inference. If it's a workflow-related question, particularly for complex workflows, it could be 10 or 50 trips back to the LLM. So LLMs are going to really be stressed by enterprise systems. We've got reasoning we're asking these models to do now. They're not built for reasoning, so they just kind of throw a lot of weight into this GPU saying, give me 100 answers and I'll pick the best one. So I think for all these reasons, the inference is going to be the heartbeat of global business. It's how it runs. So that's going to create enormous demand for data centers. So the data center trade, I'm not worried about it. We're going to have so much more demand than we have supply of data centers, given all the constraints on data centers, the capital, the GPUs, memory, et cetera. So the question would be, and I think this has been forefront in people's minds, is, well, is the business model there to support the financial commitments that are being made? And I think people look to the LLM market, and the leadership in LLM changes over more times than a close match basketball game. The score just keeps going back and forth. So the Chinese have open source models. You've got Meta and NVIDIA with open source models. So the LLM business is going to be a very competitive business. But I don't see the leaders in that market saying, we're going to make all our money on LLMs. What they're going to do is what Microsoft did with Windows and go up the stack. They're going to do what Oracle did, put them in the database and move up the stack.